Welcome to my channel. I'm Scott, and in this video we're going to talk about the ticker CCIV. That stands for Churchill Capital Corp IV. Churchill Capital Corp is a SPAC. A special purpose acquisition company is formed to raise money through an IPO to buy another company. At the time of their IPO, SPACs have no existing business operations or even a company that they plan to purchase. SPACs have 2 years to complete an acquisition or they must return their funds to investors. CCIV is planning a merger with high-end electric vehicle maker Lucid Motors. If CCIV and Lucid merge, the combined entity will be valued at $12 billion. CCIV is currently talking with investors at raising at least $1 billion in PIPE funding. PIPE stands for Private Investment in Public Equity. The PIPE funding would be in addition to the $2 billion it raised via its IPO. Lucid Motors is an automotive company specializing in EVs. It was founded in 2007 under the name Ativa. Originally, it focused on building electric vehicle batteries and powertrains for other vehicle manufacturers. The company rebranded and changed its name to Lucid Motors in 2016. Also, it officially announced its intent to develop an all-electric, high-performance luxury vehicle. The company has many employees that used to work at auto manufacturers. Two notable employees are Peter Rawlinson, the former VP of Engineering at Tesla, and Derek Jenkins, the former head of design at Mazda. The company unveiled a Lucid Air prototype in 2016. The company plans production in spring of this year. The car can go over 500 miles in a single charge. Lucid is also working with Mobileye to use their IQ4 chips and 8 cameras for driver assist features, so the car will be autonomous ready. The company is also collaborating with Amazon to build compatibility with Amazon's voice assistant Alexa. It also partnered with Electrify America to use their nationwide charging network as an option for recharging their EVs while on the road. What I usually do in my videos is I go through the company's income statement and statement of cash flows to try to estimate their future free cash flows to figure out a stock price as of today. But there's no financial information that's reported on either company. Since Lucid is a private company, there's no financial information that's publicly available. CCIV is a large cap company. It's currently trading at $62 a share, and they have 259 million shares outstanding, and their market cap is $16 billion. The company IPO'd last year, and the stock was pretty flat for a while until the company announced its intent to acquire Lucid, and the stock has gone up quite a bit. The stock has gone up over 300% in the past 52 weeks, much better than the S&P 500, which went up 17%, and the 52-week low was $10, the high was $63. The stock is trading well above its 50-day and 200-day moving average. About 30 to 40 million shares are traded each day on this stock. 28% of the shares are held by institutions, and over 2% of the shares are shorted. If you invested $10,000 when this company IPO'd, you'd be close to $57,000 today. That's an annual return of over 1,100%. The CEO of CCIV, Michael Klein, owns 88% of the stock, then Sculptor Management, then Millennium Management, then Polar Asset, then Periscope Capital. So to summarize, when you invest in a SPAC, you're investing in nothing until the SPAC can acquire a business. If the company acquires Lucid, then that's what you're investing in, Lucid. If Lucid becomes a very successful company, you could make a ton of money. If Lucid goes bankrupt, you could lose all your money. Only time will tell if Lucid becomes a successful company. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.